Grace, how are you? Hi, Grace. And we'll start off immediately. So when we talk of the financial institutions and the regulatory environment, we are concerned into the economics or what happens now in the real or the particular institutions that we are talking about. So we say in financial economics, a financial institution is an agent merely because it provides financial services to its clients. The most financial institutions generally fall under the financial regulation from a government authority. Now we have different types of financial institutions as listed. They span from banks, we have insurance companies, we have the leasing companies, we have the investment companies, and we also have the mutual funds. Now, if we look at the bank, a bank by definition, well, a bank might be commercial or state-owned, but by definition, a bank is an institution that provides financial services, including issuing money in various forms and also accepting the customer deposits. It also gives the loans, or it extends the loans in form of borrowing and also processing and creating credit for its clients or customers. Then we have central bank. Central bank is the bank for all banks. So when we are talking of a central bank, as the word goes there, it is a reserve bank or a monetary authority in an entity responsible for the monetary policy of a particular country or a group of member states, because we have regional banks. For example, European Central Bank will take care of the banks which are under the EU, the European Union. And then we have the Federal Reserve of the United States of America. In Kenya, we have the Central Bank of Kenya. Therefore, when we are talking of a central bank, we are talking of the regulator or the authority that acts on behalf of the government. So its primary responsibility is to maintain the stability of the national currency. This is one of the prime responsibility of a central bank. It ensures that the national currency are stable. So the value of the shilling to the dollar should be regulated, because this is what now brings in the inflation and deflation. So once you log in, mute yourself. It won't be useful if we are all talking, because we will interrupt the class. There is no need of me muting you from my end. So I've said one of the responsibility of the central bank is to ensure that the national currency is stable and there is also adequate supply. Money is there as and when it is needed. So they do the part of the cash monitoring and evaluation in the market. They identify if we have a lot of money in circulation, they bring in what we call the fiscal policy. And if we have the leasing money in supply, they apply what we call the monetary policy. But more active duties include controlling subsidized loans. Of course, I've said that it is the banks of other banks. So any commercial bank will be accessing the depository from the central bank reserves. Therefore, it acts as a bailout or the lender of the last resort to the banking sector, especially during the financial crisis or when we have the instability. So private banks, often being integral to the national financial system, are also incorporated, or they've been given also access to the central bank reserves. In Kenya, the commercial banks, in Kenya, we have a total of 43 commercial banks. And in the 43 commercial banks, unless they added one overnight, we have 10. We have 10 which are coming from internationally. No, not 10, 13 of them, sorry. We have the international banks. We have 3 state-owned. So these are the ones where the government controls majority of shares. We have KCB, we have Cooperative Bank of Kenya, and we have National Bank. Recently, KCB acquired National Bank because it had been put under receivership. They were experiencing some liquidity issues. So KCB currently is the owner of National Bank, but they accepted National Bank to continue trading with their name. They are not changing it. Also, being in the government, there are some of the advantages they enjoy. Because one of the rules of acquisition is if you acquire me, I cease to exist. You're supposed to convert or change the name. If you recall when the NIC and CBA merged, they had to drop and form another name. They had to drop their individual names. So that's how we are. I've said a commercial bank accepts customer deposits, and in turns, it draws loans, even in excess of the deposit. It doesn't necessarily mean that you will be given back your money. It's only a control that the bank or a mechanism of tracing the relationship between now the commercial bank and the customer. They do what we call KYC, know your customer. And one of know your customer is bringing your account or bringing your resources to be managed by us. If, for example, you have a salary account, if we manage your salary account and anything happens to your pay slip, we'll be in a position to see the fluctuation. If it is an additional salary, we will see the money that is coming to the bank is more. So don't worry when the bank is calling you and telling you that we have a product that we designed for people like you. How did they know that you qualify for such a product? Of course, it's because these people knows your turnover. They are the people who are maintaining your account. So they can really tell when it is going up, and they can easily tell when it is being affected or when it is on a downward trend. And we will see right now, because of the measures that the central bank has put into place to ensure that the industry is well regulated, in a click of a button, the bank can be able to tell whether or how you are behaving as far as your credit worthiness is concerned. So they can easily get your financial history or credit worthiness from CRB. In Kenya, we have 3 credit reference bureaus that have been registered. So these people maintain, of course, the bad book or the accounts that are malfunctioning, or those people who are defaulting on the obligations. So it's very easy when you are account or when your resources are being managed by the bank, it's very easy for the bank to be able to tell the kind of a customer they are dealing with, even before they extend any credit to you. So even in excess of deposits, what we call, or a process that we normally call in the financial world fractional reserve banking, some banks will still go ahead and give you or extend you credit. And these were some of the issues that had caused crisis, or what we were calling we had the crisis that had hit America. The crisis that caused some of we were calling it Great Recession. It's because some of the banks were misbehaving. Instead of playing the fractional reserve banking role, they were going ahead and having some hidden fees that the customers didn't know. And this ended up costing the loans very highly, and unqualified customers could also get access to the facilities. And what do you expect if you give someone who doesn't qualify to pay you back? Of course, the level of default will go up, and momentarily you'll start experiencing the financial difficulties. So a commercial bank basically is supposed to be accepting the customer's deposit and extending that deposit to the customer in form of now credit. We'll come into that deeply. Some banks, they are just there to offer what we call the banknotes. And most banks, for example, we have a good example of, I don't know whether you people knew, there was this bank, Kbr Bank, before it was acquired by Investment Bank, or the Investment and Mortgage Bank, I&M. They used to offer, or partly, most of their businesses was offering banknotes. For example, if you are trading with China and you need them to clear your consignment, they could easily do that. But in return, there is that contract that you have between you and the Kbr Bank in form of banknotes. We'll be coming to that later. Then we have investment banks. Investment banks help companies and governments and the agencies to raise money through either funding the issuing and the purchasing of or the acquisition of the securities in the primary market. For example, in Kenya, our primary market is CMA. So if you go, or if a company needs to invest in Nairobi Securities Exchange and they are short of capitation, then investment bank will come in and they'll play that role of providing the capitation for investment. And a good investment bank is Standard Investment Bank. It is housed somewhere in ICA building, Kenyatta Avenue in Nairobi. I don't know, 17th or 16th floor. Up there. So it's not a common bank, or it's not a busy bank as you will go to the other banks like Equity or Family Bank. This one specifically handles investments, and they do investments for different companies. So they do also assist public and private corporations in raising funds in the capital markets, whether equity or by debt, as well as providing strategic advisory services through or for the mergers and the acquisitions and any other form of financial transactions. So basically, an investment bank is like a financial investment advisor. They will advise you, they will be able to evaluate you and tell you, of course, through their calculations here and there, which involves a lot of actuarial science, they'll be in a position to advise whether a certain company or a corporate qualifies for a form of investment or not. And they'll assist you even in doing the decision modeling to see whether if you invest, you are going to plow back your investment or you will be risking it. Then you have the savings bank. And as the word goes, a savings bank a savings bank receives, or its purpose is to accept the savings deposits from the customers. It may also perform other functions depending on the license or what the license from the central bank regulates it to do. Then you have the microfinance banks. In Kenya, we have right now the state-owned, not the state-owned, the regulated, the microfinance that are regulated by the state authority, which is central bank. They are 24 in number. And these 24, most of them started as NGOs, or the not-for-profit making. So they'll identify, for example, an interest group. For example, let's say we have some women who are down there in Kitui, in a rural area. And due to poverty, and poverty is mother of invention, these mothers have decided to come together and do what we call commingled banking, or the commingled funds, or the table banking. So they've agreed tutakuwa tukitoa 500 every month. Once we do this 500, tutakuwa tukipea mmoja wetu alone. Let's say they are 10 mothers. If they do 500, that will be 5,000 every month. So they can decide, we are going to be left with the 2,000. We give out 3,000 as loans, let's say at an interest of 10%. So whoever accesses our facility, they'll be paying us back with an interest of 10% on the amount that we give. So by and by, this chama can grow and become an MFI. An MFI is a microfinance institution. If I give you a history of how Equity Bank started, well, the rationale was different because Equity Bank started as a building society, but the concept is the same. Coffee farmers somewhere in Murang'a came together and decided, why don't we, once we sell our coffee, be giving some little amount, let's say 2,000, and buy shares, and we form a building society. So they went ahead and formed what they were calling the Morata Building Society. By and by, their deposits were attractive, and they nearly collapsed. In 1994, I remember there was a challenge in Equity Building Society, and they nearly closed. But they devised a mechanism. There was interruption, and they decided that instead of doing now the building society, where we are putting our funds together and then we build or we extend a loan to someone to go and build a residential house, let us start accepting the customers' deposits. And instead, we run a microfinance. That is how Equity Bank peaked. So they went into the market that had not been utilized, the underutilized, the unexploited potential. You know, initially, I remember for you to open a bank account back then in a bank like Barclays, Bank of Kenya, you had to deposit 3,000. So you can imagine a farmer who is down there and they've never gotten 3,000 as a lump sum, and you are telling them that is the entry requirement. So Equity came in, they lifted that barrier of entry. They didn't even need your passport because most farmers didn't have passports. So when you tell someone to board a matatu to go all the way to Thika to get a passport, they'll say there is no need of that account. So they invested in cameras. You could go to Equity Bank, even with the slippers. Unaambiwa tu usimame kwa ukuta, unapigwa picha. wanakufungulia account na unapewa card. They used to give people some temporary card as you wait for your ATM. That was the game changer for Equity. So from an MFI, right now as you are talking, the other day they were given the best award in Africa. So Equity Bank is the best bank in Africa. They went to a situation of even acquiring one of the biggest banks in Congo, BNBC. So as we talk right now, Equity Bank is the best bank in Africa. I was listening to Dr. Mwangi the other day when he was saying by 2025 they want to hit 1 trillion in asset capitalization. 1 trillion means 10 times the GDP of Kenya, because our GDP is a staggering 100 billion. So you can imagine, and we are talking of 2008. They got a license in 2008. So 12 years down the line, it will be 15 years, because they are targeting 2025. They'll be a 1 trillion institution. So MFI was trying to say, although they start from the NGO form, by and by they go to great heights, to even becoming multinationals. Because Equity Bank started as a building society, modified itself into an MFI, by and by became a commercial bank, they are now a multinational. So an MFI can grow from nowhere to a multinational. But we have most of these MFIs, they are started by the NGOs with an objective of trying to draw people from poverty by empowering them and giving them small credits. So in Kenya, the 27 microfinances that we are talking, I would say they have reduced to 24, because some have been acquired by, they've been recently acquired by major banks. So right now, the regulated ones, we have 24. Yeah, so we have 24 microfinances, and they offer their services, of course, under the central bank's prudential regulation. We do also have another segment of unregulated microfinances. And this is where the Shylocks are. People who lend money, but they are not known by the regulator. And this is one of the areas that has opened a loophole to a lot of money laundering and the funding of illegal sex and terrorism act. Also through the unregulated market, we've had what we call the drug peddling, or the drug barons, or what we call the structuring or the smurfing. And smurfing is, now these are the people who deposit large amount of money in small chunks. Of course, if you are intending to deposit, let's say 1 million, I said when I was giving the overview, right now you are supposed to give what we call an incident report. You are supposed to inform the bank why or where have you gotten this money from. If these are proceeds from a business, you should be able to show some source documents. For example, you can give us copies of invoice, copies of the LSOs. Yeah, you are supposed to see the copies of the purchase orders, delivery notes, name it. But in the unregulated world, most of this documentation, and this is where illegal money is being kept in Kenya. And you'll see how central bank or different authorities have been able to unmask the unregulated industry. So they'll come with very harsh ways of giving money. And these people are operated by, these MFIs, they are operated by goons. So if you need your money in Nakuru, you can even bring the money in trucks, because they don't want this money to go through there right channels, kwa sababu wataulizwa hii pesa mumetoa wapi. So they can even bring you the money or send people to even bring that money in paper bags, but thou shalt not try not to pay back that money. These people can easily kill you. They are merciless. So we'll be coming to the unregulated industry. Then we have the Islamic banks. Of course, Islamic banks are the banks that conforms now to the Sharia laws of the Islamic economics. And Islamic law prohibits what we call the usury. So when we talk of usury or usury, or depending on the part of the world that you are coming from, this is overcharging. This term here means overcharging. So it prohibits overcharging, and the overcharging will come when we have some hidden fees that the customers are not being taught about. For example, if you go to access a loan in Kenya, the agent or the salesperson of the bank will not disclose some information. For example, well, and we know it's a regulation, central bank requires full disclosure to the customer. The bank is supposed to tell you, we are giving you 1 million, we are charging an interest of 14.5%, but because it is unsecured product, we are supposed to be paying what we call insurance. The other cost they call the processing fee. Other banks will go ahead and charge you what they call encumbrance fee, etc. So this in Islam is what they are calling now the overcharging. So they don't believe in the overcharging. So this is what they call the riba. A good example is now most banks, of course, they have conformed, trying to go to this market and get and most of them do huge deposits. If a Sharia banking person comes before you, in most banks they have queues, or they have dedicated cashiers. If someone who is, let's say, depositing money in a Sharia account goes before you, you may end up spending 30 minutes in the bank waiting for the money that they are carrying to be counted. So these people will come in some funny bags, some funny paper bags, yeah? So wewe unangoja pale huko nyuma ni watu wawili wako peke yako. But one guy ends up spending 30 minutes at the cashier's till, counting their money, and they do large deposits. So most banks have opened what they are calling La Riba accounts. And by La Riba account, they are saying the bank will not eat your interest. Riba is interest in English. So you will be enjoying the interest. The bank will just be keeping your money. But that is a way of enticing these people. If you go to First Community Bank, and the CEO of First Community Bank, Dr. Abdiratif Isaji, he was my lecturer at the University of Nairobi. I was talking to him the other day. We just met somewhere in the corridors of this city. And he was telling me I should close my account where it is and follow him. Because if I go to his bank, now the First Community Bank, I won't be charged any interest. And even the kind of products that I'll be benefiting from, they are amazing. So in a way, the products or the bank will design a product that will suit that particular customer clientele. And that is what most banks have done. They have incorporated their banking the Sharia accounts, where Muslims are now free to go and deposit or transact without being charged any interest. It's amazing how our banking system has really grown. Now we go to non-bank financial companies. And these are the companies that are in the financial sector, but they don't necessarily accept deposit or extend that deposit. So when we are talking of the non-bank financial institutions or the non-bank companies, they provide banking services, but they have not been licensed as a bank. So regardless of them not having the license, they'll go ahead in their various jurisdictions to accept and also extend credit to customers. And most of these banks, they will normally go into the territories or the countries where the market is not so strict as far as regulation is concerned. A good example is New Zealand. I should give an example with New Jersey. You remember we have our, what do we call him? The former Minister for Finance, the guy in charge of Treasury. And we had the CEO of Kenya Power, Gishuru, Senior Gishuru. Remember, they have a case in New Jersey because of the kind of deposits they have made in that country. Now, if there are regulations, how did they deposit a lot of billions in that country? And you've seen even efforts to induct them, they seem futile. You know, in Kenya, when you have billions, you can easily buy your freedom. So it's become very hard for these two guys to be indicted to go and face now the irregularities that they are facing. Reason being, we have a lot of loopholes in the country that they have banked with, now the New Jersey. And this is one of the areas that the global players in the financial institutions and markets are trying to curb, because this is the only way that we are going to curb the incidences of money laundering, or what we call the AML, anti-money laundering. So typically, they take deposits from the public, and they also go ahead and do what we call the extension of credits. For example, in India, most of the non-bank financial companies raise capital through what we call the cheat funds. A cheat is a receipt. You just come and deposit, I give you a receipt to show that you deposited 10,000 in my account. But there are dangers. One of the biggest bank in India started as a non-bank financial institution. The Republic Bank of the People of India. It is called India Brakyat Bank, to mean the Bank of the Republic, the Bank of the People's Republic of India. They started as an NBFC, but they have grown to be one of the biggest banks in India. You can Google and see what they are doing. It's big, and they normally focus on the impoverished communities, those people who are the lowest in the social status. That's where they focus their energies in, to try and support them. And one of their areas of interest is trying to empower them through small credits that are payable, some monthly, some quarterly, half yearly, at most 1 year. They will not give you any credit of 1 year. Then in the next category, we have the investment companies. Now, generally, an investment company is a corporation or a business, a partnership, a limited liability company, etc., that issues securities and is primarily engaged in the business of investing in securities. So an investment company will invest its money that it has received from a pool of investors and go ahead and invest it. So it's like commingled funds. I get several investors who are willing or they don't have time, and they are willing to identify someone to do a business for them. And we call these people investment managers. So I approach an investment manager who introduces me to an investment company where my portfolio of investment will be maintained. And they can do investment in different areas. They can do investment in real estate. Some of them go to money market funds. Some of them go into the debentures, the government bonds, etc. What I want is, whatever the agreement that we have with this investment company, for example, for every 1 million that I give, I'll be able to plow back, let's say 23% every year. Come the end of the year, I expect that money to be plowed back in my account. So summarily, that is how the investment companies will work. Then you have the brokerage houses. I said, if you want to make money in this town, be a broker. You see, a broker will just have information. So once I have information, like the shares of company ABC, like let's say company ABC is selling their shares at, let's say one share is going for 10 shillings. Let me give a live example instead of giving ABC company. In 2008, Safaricom Limited floated their shares into the public through an IPO, an initial public offer. One share was going for 5 shillings. So by and by, the shares of Safaricom went down. I remember they traded at negative from 2008 to 2012, sometime in July, August. They had gone to an under of even 2 shillings 85 cents, I remember. But once they short, one share was costing 13 shillings, 13.65 shillings. So you can imagine an investment company that had taken in their portfolio Safaricom shares in 2008. The investor requires their money at the end of every year. But where you have invested that money, they are making losses. So it's a very serious business. That is why they are going to have investment in a multi-sectoral pool to try and match where they are losing, they'll at least gain. So they'll take some of their money in real estate, some of their money will go to the unit trust, some of their money will go to, let's say, bonds, etc., ensuring that they have an optimal portfolio, where even if they are going to lose on one segment of business, they can still match that loss in another segment of business. So I was talking of the brokers before I got distracted and went back. A broker rides on information. So the broker will get the information of what is the cost of the shares, which shares are likely to drop. That is very significant, because when they are targeting their client, they'll tell them KCB shares will lose value tomorrow. This is the best time to buy. So this is the best time to buy. A minute. Sorry for the distraction. I'm back. Yeah, very well. We were talking of the brokerage houses, and I said that a broker, they'll have information on the different securities that are trading in the security market. So what they do, they ride on that information to charge a transaction fee to the customers or to the portfolio of the companies that are listed in the brokerage firm. So these people, there are those who are doing it online, so they don't necessarily need a physical office, and we call them discount brokerages. So they'll give you a discount because they are not incurring most of the overheads. And then we have what we call now the full service brokerage, or those who offer the private client services. And in Kenya, you know, you cannot access the securities market as an individual. The market is regulated in such a manner that you have to go through a brokerage firm. So after you open the CDSC account, you got now to approach a different or a registered broker who will be doing or who will be providing the advisory services on your behalf. You'll be coming deep into the brokerage. Then we have the leasing companies. And in the leasing, this is the property industry where I need to access the property. I need the rights or the privileges to use the property. So I'll have the owner of the property. Now they bear different names. We can call them a landlord if you are doing the month to month or for the short-term period. And we have the lessor. Lessor is L-E-S-S-O-R. This person will enter into a contract with a certain individual or firm on extending their property to be used by the lessee. The person who is now using or who is being given the privileges or the rights, we call that person a lessee. For the landlord, we have the tenant. So you need not even have a written agreement. You can do a verbal agreement. Hii nyumba yangu 1 month ni 10,000. Na lazima ulipe before date 5 of the following month. That in itself is binding. But coming to the leasing companies, you must enter into a form of agreement because the terms and the conditions that are tying the leasing companies, they are more comprehensive and it involves some money. So you can imagine going and acquiring a building. Let's say Zitec University want to acquire the Pioneer House campus, the whole of it for purposes of running the classes. They have to enter into an agreement, a lease agreement, with the owners of Pioneer House. The owners of Pioneer House are Pioneer Holding Insurance Company. So we must approach that owner, who we are calling the lessor, enter into the agreement to determine how the payments, or what I'm calling the determinable consideration, will be done. Could be the lease is for 10 million, but you see this lease is for 10 years. So it doesn't necessarily mean that I'm going to pay the whole amount now. So we can agree in the lease agreement or in the lease contract, I'll do a deposit of 5 million. Then the remaining amount will be paid, let's say, every year. I pay you 500,000 for the period of 10 years. That way, by the end of 10th year, I'll have completed my lease amount that we had agreed in the agreement. Then from there, we have the insurance companies. Now, for the leasing companies, we are not going to have more time in that because they are not financial institutions per se, just that they are custodians. Then we have the insurance companies. And insurance in Kenya can be broadly categorized into two. We got the life insurance. This is where you insure your life, or you get a life policy. You agree that I'll be paying you 10,000 for the rest of my life until I retire, or whichever comes first. Depending on the policy document, some will say in your productive years. Productive years is when you are working. So let's say you are employed at 24 or 25 years, and you will work until 65, then you retire. So you can go for a life policy and agree with the company, I'll be paying you 10,000 every month. And this 10,000 is what we are calling an annuity. So you can say in Kenya, our insurance company is regulated or is categorized into two broad categories. Life assurance, which covers the life. Then we have the general insurance, and the general insurance now covers the other risks. For example, if there is a loss through fire, we call it fire insurance. If it is, let's say, motor vehicle accident, we have the motor vehicle insurance cover. We have burglary insurance. If you lose your property through theft. You can even cover dishonesty employees. If you are, let's say, running a forex, chances of losing your money is so high, so you need fidelity insurance to cover the dishonest employees. Damage to third parties, we have third party employee, we have death, we have the injury or sickness or death at workplace, we have what we call the WIBA, or the work insurance, the workman compensation. If you lose profits due to, let's say, natural causes, we have what we call the consequential loss insurance, etc. So broadly, we can categorize them into life and non-life. Life covers your life or your beneficiary. It means if you lose your life, your beneficiaries will be the beneficiaries that have been identified in the policy will get the benefits from the insurance company. So it's like, it is a form of trying to safeguard your beneficiaries when you die, because you don't know when you will die. Some of them mature in your lifetime, so you will still enjoy some profits from the insurance, but most of them cover your life. And life insurance has seen most families or most homicides, most deaths. For example, in America, most deaths are due to life assurance. Your wife understands that you have a life policy where you have covered her, let's say, at 10 million US dollars. This is a lot of money, isn't it? You work. Let's say you have attained the age of 40. They say in those countries life started 40. So mama anaona hauna mbio na utakufa haraka, na kuna ile pesa ulikuwa umemwekea 10 million. So the easiest way of getting that money now ni kukutuma kwa baba. So they'll organize hitmen to come and kill you. Then they process the life assurance. It's as simple as that. If I die and I'm the one who was paying for the policies, it matures. So it is death or retirement, whichever comes first. So they take away your life. They are outside there enjoying your 10 million US dollars, which is a lot of money. You can multiply that with 103 to see how many Kenyan shillings your wife will be rich when they process your life insurance. So it is advisable. Keep it as a secret, write it in your will, and disclose this to only the right people. And the right person here is your executor. So the person who you are looking for to execute your will when you die, of course you trust them. You must have given them some level of high trust. So tell them I have a life insurance. If I die, the beneficiary identified there is beneficiary number 1 is my wife, beneficiary number 2 is my son, beneficiary number 3 is my, let's say, 2 daughters. So if I die, this is how I want my estate to be shared amongst the 4 beneficiaries. So if you do that, you'll be in a better position. Then we go to the mutual funds. Now, mutual funds is comprised of a pool of funds collected from many investors. A good example of a mutual funds company in Kenya is Old Mutual UAP. If you go to Upper Hill, these are the people who are owning one of the biggest buildings in this town. So mutual funds, they will pool money from different investors, and they go ahead and invest this money, just like the investment companies. They will invest it in a portfolio or in a pool of different investment vehicles. They'll do some securities, some bonds, money markets, unit trust, etc. So they are operated by money managers. So what will happen is they'll advise you on the kind of returns that you're expecting from the form of, for example, if you go into MMF, the money market fund, they'll tell you you can only deposit a minimum of 500,000. Out of this 500,000, every year will be able to give you back 8%. But if you want this money monthly, we can give you a rate of 13%. In finance, we say the higher the risk, the higher the returns, and vice versa. If you are risk averse, you won't make any money in the mutual funds. So these people will risk your investment. Of course, they'll cushion you against loss, against inflation. So worst case scenario is getting your 500,000 back, but you cannot lose it. But there are those portfolio of investments that you can take this 500 and it is swallowed the same month that you deposited it. So to avoid that, we have the mutual funds. They've been regulated by the Commissioner of Cooperatives and also Central Bank of Kenya to take charge of investing for different investors. Then we come deeply into central bank, which we said is our bank of last resort. Kikiumana kabisa, the bank of last resort is central bank. And this is the bank. In some countries, they are independent, but in our country, we still have some influence. So they'll be influenced politically, even when they are making their monetary and fiscal policies. And that's the biggest mess. If you go into the first world countries, the progressive economies like European Union, like USA, European Central Bank and Federal Reserve of United States of America are independent. Whatever the decision they make is final. It cannot be changed by the president, it cannot be changed by the parliament, it cannot be changed by the judiciary. But in Kenya, it is not the case. But by and by, we are trying to seek this independence through, of course, can also agree that we are still growing. And therefore, tunaenda pole pole. So these banks will be headed by different people. In our case, Kenya, our central bank is headed by a governor. If you go to places like Hong Kong, they call the person at the helm managing director. You have some calling them CEO, some calls them the president, etc. So in most countries, central bank is owned by the state. And the state has a minimal degree of autonomy. By autonomy, I mean control. Therefore, the government can intervene and try to control some of the aspects. But in some countries, I've said it is totally 100% independent. It is created by an act and it has to be regulated in that manner. So let us see the functions of the central bank. Now, one of them is implementing the basis of monetary policy. Of course, I say these are the people who are in charge of the cash that is in circulation. If they realize that we have a lot of cash in supply, which might cause inflation, they come up with policies of ensuring that only needed money is in supply. The challenge of inflation is overpricing of commodities and losing the value of the shilling to the dollar. So to avoid this, we have now what we call the monetary policy. Of course, they'll also be in charge of issuing the banknotes. They'll also be controlling the entire money supply, what is outside there versus what is in our reserves. And they are going to provide what we call the gold bullions or the gold reserves to cushion the money that is being regulated or being circulated in an economy. So the government, it's the government banker and the banker's bank. By saying that, we are talking of if, for example, a government, if, for example, the government is experiencing some cash turmoil, they will run to the governor of central bank and tell the governor, we want the public to lend money to us. And we can only do this through the issuing of treasury bills or treasury bonds. So the governor of central bank will go ahead and say, looking at the economy or where we are, we can allow you to go ahead and invest, let's say the government wants to run an infrastructure bond of 500 billion to fund a project, let's say construction of highways. They'll approach the governor of central bank. So the CS for treasury will go and sit with the governor and agree. If they can get that money from the bank reserve, the central bank reserve, it's easy. But you'll find that most bank reserves, they are kept at that point for a rainy day. So the advice that will come is go ahead and extend the borrowing to the public. Let the government get the money from its people through either the bonds or the treasury bills. If it is short term, we call them treasury bills. Long term, we call them treasury bonds. So in return, the government will give you a debenture certificate to show that you have given the government your money. And then at maturity, of course, they'll pay you back. By lender of last resort, we mean all the commercial banks that are operating under this soil, they get their deposits from the central bank when they need it. Suppose you try to collect the customer deposits, but it does not meet your requirement as a commercial bank. Then the lender of last resort will be CBK. And then it manages the country's foreign exchange and the gold reserves and the government stock register. I had indicated here earlier that they are in charge of ensuring that the shilling does not fluctuate to the dollar. They are also in charge of the banking regulatory policies. And the last one is they set the official interest rate, or what we call the Kbr rate. I was telling you in the previous class that the governor of central bank is one of the most important persons in this country because he determines on at what percentage the other banks will be giving their credit at. So Kbr, the Kbr rate, right now we are standing at, because of Corona, we came back to 8.5%. And this was to cushion most of the MSMEs, the micro and the small and medium enterprises. So the Kbr rate was taken down. This is the Kenya bankers rate. When I talk of the Kbr rate, This is the rate at which the commercial banks are getting their loans or money from central bank. When they do this, they can only add 4.5 over and above the 8.5. So right now, as we are talking, you can comfortably get credit at 13% per annum. If they go over 13%, you can sue that bank because it is going against the regulation. Of course, depending on your relationship with the bank, some can even give you the credit at 10%, others 11%, but the highest, the ceiling is over and above Kbr rate by 4.5%. So let's have a perspective of the global financial rules that has helped in shaping the Kenyan market. And I had indicated that our central bank, since the inception, since the coming in of Njoroge from the World Bank or from the IMF, the International Monetary Fund, we were able to borrow widely on what is happening in the progressive world. And most of our policies have changed. And I was talking about the capping in the previous class. Right now, you cannot deposit over or withdraw over 1 million over the counter without raising an incidence report. And the reason we are doing this, Kenya was one of the corridors where the money laundering was being done, also funding of terrorism. We had the drug barons also trying to put their proceeds, or the proceeds that had been ill-gotten or gotten through crime was coming through our, you can imagine, our financial system. So to me, it was regular. So the bottom line is that Kenya financial regulatory landscape is being radically shaped by the global forces. That's what I wanted to say. We saw what happened after Obama came in the country in 2015. This is when most of these rules, who is our big brother, this is when most of these rules were put into act. And right now, as we are talking, we are also bound by what we call the Dodd-Frank Act. And this act came into being in the US when they were experiencing the Great Recession. This is when the Dodd-Frank Act came into being. Of course, the sponsor of the motion in the House of Congress was Dodd-Frank. And it was geared toward protecting the consumers. It was geared toward protecting the consumers with rules like keeping the borrowers from abusive lending and mortgage practices by the financial institution. And this is what affected the fourth biggest bank in USA, Lehman Brothers. If you recall, Lehman Brothers went down sometime in 2010. Am I audible? Chelagat, can you hear me? Chelagat,
Hello?
can you hear me?
Okay. No, at times you are unapotea.
Lakini sasa nikipotea nyinyi hamuongei.
Unapotea tu kidogo.
Hiyo kupotea ndio mbaya. Fidelis. Afadhali mimi. Fidelis sijui yako wapi. Fidelis.
Simu yake ni mbaya.
Hmm?
Kama simu yake ni mbaya.
Lakini ananisikia.
Huenda anakusikia.
Gumbao.
Yes,
Unanisikia vizuri?
nakusikia.
Mkikosa kunisikia mnasema you can
Simu
even chat.
yake moja
You can make use of the
ya simu yake ni mbaya.
Chelagat.
Yes.
Ukiongea na watu huko nje unajimute. I was saying let us make use of the 3 buttons down there depending on your device, on the device you are using. You can chat me and tell me that I'm not audible. Yes, Wanyama? Wanyama? Wanyama, you are raising your hand. Wanyama, Anastasia, you are raising your hand. Anastasia. So you can go on. Gumbao. Abanas. We talk bana. Albanas. Anyway, let's go on. Let's go on. That's a challenge of online learning. You know, at times it could even be your gadget. Could be the problem is coming from your end, depending on the stability of the network. But either way, life has to continue. Very well. So I was talking about the Dodd-Frank Act, and I was saying that its purpose was to try and protect the customers from the abusive lending and mortgage practices. Because what usually used to happen was the Federal Bank of USA had given the commercial banks, as long as they are within the regulatory policy, they could go ahead and come up with their way of charging the fees. So they realized that there were a lot of hidden fees that were not disclosed to the customers. And this caused the financial fear and instability. It paralyzed the country's lending, especially the SMEs. Although even the large companies were also struggling to continue operating. And in 2008, financial instability peaked, and this is when the Lehman Brothers collapsed. So after its collapse, of course, America were in a great recession and they had come up with a mechanism. And this is when Dodd-Frank came up with a law that was placing major regulations on the financial industry because they really needed to cushion the consumers, or those people who are using the products of the bank to help stabilize or run their businesses. We saw even the securities, the market, the New York, and it is the best securities company in the world. New York Security Exchange. The stocks plummeted, the market froze. So these people had a nosedive in the investment. Most of the investment portfolios were in New York Stock Exchange. So they had to do something. And this is when they came up with the law of placing the caps. And this cap, we can see it affected Kenya. Then we had the FATCA, the Foreign Account Taxation Compliance Act. And FATCA, it was a higher act. Basically, it was affecting the foreign financial institutions and entities, where they were required to report on the foreign assets held in the US soil. But also the US persons were expected also to subject or to subject the accounts that were held with the foreign financial institutions to scrutiny. I'm telling you, if you bring this thing in Kenya, our recent case is the Governor Obados. You saw how he was trying to channel some amounts to the sons and daughters, saying that he was paying for their school fees, I think in Australia or something. And this is what we are calling smurfing. Smurfing is basically trying now to divert the proceeds of crime into a friendly environment. That is what they were doing. So FATCA came in to regulate that all the foreign assets held by US persons outside the US soil must be accounted for. And equally, all the foreign financial institutions that were operating on US soil had to give a full disclosure of the accounts they were holding. And if they fail to do this, there are a lot of penalties to happen, including closure. So the US law relates to our law by and large, and we are ardent followers of what we call the Patriot Act. Now, who has unmuted himself? Fidelis. Nyamai. Fidelis. Manyama.
Yes.
Yes, talk to us.
There's a problem with the audio, the speaker.
From my end or your end?
From your end.
You can't get me clearly right now?
And there are still some background sounds. Echo.
Now, what are we going to do to the echo? It is really interfering with the... You can't hear?
Yeah, I can't get you clearly.
But you can see.
Pardon?
But you can see what I'm portraying on the...
Not now.
I've not shared.
No, I lost you some minutes ago, just your name.
Yeah, that is the kind of feedback that I want us to... But you know, Fidelis, it could be your end, could be your internet. Who else is experiencing a problem like that? Participants, who else? Dolphin, are you well? Dolphin Makoha, are you well?
I'm well, sir.
So you can hear me loud and clear?
Yes.
It could be the challenges on the Fidelis end, not my end, isn't it?
It's now, I've seen your display just now.
But you could hear me. You see, seeing display and hearing are not related.
But from far.
Yes? You can hear me?
Yeah.
I'm just doing some sampling. Gumbao is not talking. Nyamai, can you hear me? Abanas. Well, let me see. But I don't have a problem with my audio. I'm trying even to unplug.
I can hear you.
You can hear me? Kindly, if I start losing you,
Yes.
kindly chat. So we are okay now, right? So I was saying that our central bank is a beneficiary of the regulatory landscape that is being radically shaped outside there by the global forces. And in reality, we can say that we are better placed. And most of our best practices are borrowed from US. We have the Patriot Act, we have the FATCA, and I've just shared on the Dodd-Frank Act. So we are winding up. We won't overstay here. What I'm trying to say is our financial system, if we have loopholes, Fidelis, you are not meeting yourself. Fidelis, mute yourself. Very well. So I go on. I was saying we are at a higher risk because Kenyans have adopted or we've accepted the technologically advanced modes, and therefore we got to benchmark with the best in the industry. And that's why I'm saying most of our best practices are borrowed from the Federal Reserve of United States of America. And they are really trying to guide us. Our FRC, I said the other day, we have the Financial Reporting Center, which is being run, or the formation of the board of the Financial Reporting Center is a replica of FinCEN. FinCEN is the Financial Crimes Enforcement Network of United States of America, a center or a body that has been formed by the best in the financial regulatory industry, best investigators, FBI, CIA, name it. In our Kenyan system, we have both the National Police Service and we have the National Intelligence Service. They are in the Financial Reporting Center. And the reason we are doing this, we are trying to really close into the financial crimes. And we know that the fraudsters, all the smurfing is every other day, they are coming with a new mechanism of trying to alter the policy or the operational environment that has been put in place. And I'll give an example of, for example, we have a lot of regulation in, before you get licensed in Kenya, you really have to undergo the checks and balances to ensure that you are really standing up to test. Then we have the capping, we have the ensuring that we account for all the deposits that are over and above 1 million. We also have our Anti-Terrorism Act. We have the Anti-Money Laundering Act. And all these have been put in place to ensure that any crime that will be committed through the financial institution is supposed to be harnessed. And those people who are perpetrating it, they are caught. I wanted, before I leave, to explain what we call smurfing, or how smurfing is done in Kenya. Now, smurfing, it is trying to be clever. The central bank has set the deposits of 1 million to be accounted for. So you go to different institutions, financial institutions, and open an account. So unasema leo tuseme unaweka 300,000 at Equity, unaenda unaweka Family Bank 200,000, unakimbia Absa unaweka another 400,000, unakimbia in another bank, let's say Standard Chartered, unaweka 150,000. So at the end of the day, you will have deposited over 1 million, but you will not account for that. The reason we call it smurfing is because these guys who are doing it, they are busy running here and there, trying not to be caught by the authorities. Now, it is so structured even internationally. A drug baron, or those people who are in the illegal businesses, they will corrupt the alternative remitters who are authorized. For example, if you wanted to send money to a student in Australia, the only way that you can do that is through a person that you trust. And this is where the alternative remitters comes in. So let's say parent X want to send money to a student Y in Australia. The only way that you can trust that your money will go to the right person is for the parent X taking the money to a remitter who is called A. This remitter has a relationship with a remitter who is in Australia, and we can call this remitter B. So pesa itapelekwa kwa A in Kenya, lakini B ndiye atapea student pesa in Australia. So instead of B giving money to Australia, B ana-identify a drug baron, ule atapelekea student pesa. So pesa inapelekwa, instead of B, who is a remitter taking money to your student, pesa inapelekwa kwa student na a drug baron. Alafu in the streets of Australia, wote wanashikwa na polisi. So utakuwa ukiona kwa news, your son or your daughter is appearing in the news as a smurfing network. Na yeye alipelekewa ile pesa na a drug baron who is working or conniving with the remitter, who is a well-regulated person. So the loopholes in the financial industry, na hii maneno yote ya drug proceeds of, let's say, terrorism, proceeds of even the trafficking, human beings trafficking, inapitia kwa a regulated bank through loopholes. And this is what we are trying to close in the financial institution, through coming up with hefty fines. For example, those banks that were involved in the NYS scandal, they were charged a lot of money. The fines were so high because they ought to have identified the suspicious transactions and raised the suspicious transaction report with central bank even before the proceeds or that money, which was a proceed of crime, come out of the bank. Now, when you go to the bank, the cashier is not supposed to advise you. Actually, you are supposed to be caught off guard. So umeenda na your 3 million, unataka kudeposit. The cashier is supposed to give you a comfortable room, akwambie kwa sababu pesa yako ni mingi, tafadhali kaa hapa nikuitie branch manager. While at it, the branch manager has a security that has been provided by the state. Some is being paid for its private security. So you've seen G4S, Wells Fargo, etc. These are people who've been trained in these cases of crime. So yeye ataingia akuulize, sasa kijana, hii 3 million umetoa wapi? So it is at that point that you know that you're in the hands of the police. So they are not supposed to tip you off. They are just supposed to manage you comfortably as they get the authorities into place. Some people, depending on the amount that you have transacted, I remember there was a transaction that was held by KCB in industry area, and it was about 160 million. So the guy who was coming to deposit this money Kijana anakuja tu na very simple station wagon na anaanza kutoa pesa hapo na magunia akiweka kwa bank. So money of this magnitude, of course, askari hawezi kukushika wakupeleke industrial area police station. So they took the guy, wakamweka kwa gari mzuri, wakamweka kwa Subaru Forester. So those people who operate this they have to play with your psychology. Wakaleta jamaa mpaka Eastern Bypass huko Kamakis. So wakapima nyama mzuri. Jamaa kaulizwa, sasa hii pesa yote unabeba na magunia, hebu tuelezee vizuri. Na sisi tunataka tusaidiane. Hii pesa unatoa wapi? So they realized that this guy was being used in smurfing, or what we call structuring, to deposit this money. And they had identified a branch manager in that bank and was accepting that cash without any suspicions. So this is how they were able to nab this guy. So you can see what is happening. These crimes are so punishable, but because we are profiteering, branch manager anaweza sema, hii mshahara nalipo hapa kwa banka haitoshi. Kama huyu jamaa anaweza nipea 20 million out of this 160 million, wacha mimi niomoke. So that is what has been happening. So team, I want to end this class. Any question? I want us to go to the platform and discuss from the platform. Duncan, how are you?
I'm fine.
Duncan, sema.
Niko poa.
So nasema tunamaliza class, we now go and transact from the portal. And okay. There are some people who are not responding to discussion. Usishangae ukijipata wewe una attend all the Zoom classes, lakini kwa timetable you are being marked absent simply because you are not involving yourself in the discussions. So kindly let us go to the portal. Do you have any question? Anyone who has a question, you can ask.
Yes.
Yes, Chalangat.
Hello.
Yes.
So I was asking your discussion, you are free to write hapo kwenye wamesema reply, alafu hapo utakuwa umemaliza.
Exactly. That is what you are supposed to do. You are replying to the discussion.
Oh, okay.
Yes. Chelagat, you want to tell me you've not been involved in discussions in the other units?
No.
You are not?
Yes, like I started this week.
Okay.
So I'm supposed to do the other week.
It's okay, it's okay. Any other question? So we are free to go to the portal. I'll be ending this session in a few. Thank you for listening. Enjoy your afternoon.